Welcome to our year-end tax planning series. I'm Lana Getty from Patrick & Rain CPAs, and today we're covering what you need to know when using your vehicle for businesses in 2025, from deductions to documentation and fringe benefit reporting. Deducting vehicle expenses. If you use your vehicle for business, you can deduct expenses using one of two methods. You can use the standard mileage rate. For 2025, the IRS rate is 70 cents per mile. This method simplifies deductions by bundling fuel, maintenance, insurance, and depreciation. If you prefer, you can use the actual expense method. Deduct the business use portion of actual costs, gas repairs, insurance, registration, and depreciation. You must keep detailed records to support this. Whichever method you use, you'll need to keep a log of your business miles. If you only use your vehicle for business, this will be simple. Record your mileage on January 1st and again at the end of the day on December 31st. Deduct the beginning number from the ending one, and you'll have the number of business miles you have driven for the year. If your vehicle sees business and personal use, you'll need to record the starting and ending mileage of each business trip and total those up at the end of the year. You'll still need to record the January 1st and December 31st mileage to determine what percentage of use is for business. Section 179 and bonus depreciation. The Section 179 deduction allows businesses to deduct the full purchase price of qualifying vehicles in the year they are placed in service. There are limits though. For light vehicles, those weighing 6,000 pounds or less, the deduction is capped at $12,200. For heavier SUVs or trucks, those weighing 6,001 to 14,000 pounds is capped at $31,300. Clearly, that won't cover the cost of most vehicles, but after you've exceeded the Section 179 limits, you may be able to deduct some of the remaining costs under bonus depreciation in 2025. This applies to both new and used vehicles. Also, for Section 179 to apply, you must be able to show that the vehicle was used for business purposes more than 50% of the time. Let's go over usage classification, but as I mentioned before, you'll need to keep a log of your business mileage. Personal versus business use. Only the business use portion of your mileage is deductible. Commuting miles, that is, driving to work and back, are generally not deductible. Fringe benefit reporting. So, what if the employer provides vehicles for employees? Under IRS rules, when an employer provides a vehicle that an employee also uses personally, the value of that personal use has to be calculated for tax purposes. One way to do this is the Automobile Lease Valuation Method, often called the ALV method. Here's how it works. The IRS publishes lease value tables based on the fair market value of the vehicle when it was first made available to the employee. You look up the annual lease value that corresponds to that fair market value. Then, you prorate that annual lease value based on the percentage of personal miles compared to total miles driven during the year. This method is most often used when the company provides the car regularly for both business and personal use, and it gives a consistent way to determine the taxable portion each year. The mileage method. Multiply the number of personal miles driven by the IRS rate, example 70 cents in 2025. The mileage method is a simpler alternative used when it's practical to track personal miles separately. Instead of using lease tables, this method just multiplies the number of personal miles by the IRS standard mileage rate for the year. This method works best when personal use is limited and the employee keeps a reliable mileage log. The key is that the employer must be able to verify the mileage records to stay compliant with IRS documentation requirements. The value must be included in wages and reported on the W-2 by January 31st of the following year, or the following Monday if January 31st falls on a weekend. Planning tips. You'll want to plan ahead rather than wait until your vehicle is already being used for business. Choose your deduction method in the first year the vehicle is placed in service. Keep accurate records of your mileage and expenses. Consider the vehicle weight and usage when you're planning a purchase. Review IRS publications like Topic 510 and Publication 463 for deeper guidance. Thanks for watching. If you have questions regarding the business use of your vehicle, reach out to us at Patrick & Rain CPAs. We're here to help you close the year with confidence.